Hi, this is Mark McRae and thanks for joining me today. In today's lesson I will be looking at ways of drawing trend lines and Fibonacci to help identify a potential trade. In this chart of the daily euro dollar, in order to draw trend lines we first have to identify areas of resistance and support. I shall add here a little line identifying that this is an area of resistance. This is a significant area of resistance here. The market reached this point, turned around and headed back down. It formed support here, then moved up and formed resistance at this point here. The market then moved down past the previous area of support, formed new support here, then headed back up and formed resistance at this point here. The market moved down past the previous area of support and formed a new support area at this point here. Now, in order to identify these areas of support and resistance, or valleys and peaks, I'll add some lines to make it more easily identifiable. This is a valley, moved up towards a peak. The peak moved down to a valley, moved up towards a peak, and then finally moved down to form a new valley at this point here. Now, in real trading, once you reach this point here, this is all the information you have. Once the market moved down, formed support, then moved up, formed resistance, came back down, took out the previous area of support of this valley, you can now draw your first trend line in a downtrend. You connect the most significant high to your most recent peak. And at the time, the most recent peak was at this point here. The market then continued down, came back up, formed a new peak here, and then surpassed the previous valley. As soon as it surpasses the previous valley, you can now add your second trend line, connecting the most a significant high to the most recent peak. At this point here, the market is still in a downtrend. The trend shall only be broken if the trend line has been breached and the most recent peak has also been breached. Here you can see the market took out the previous trend line, made its way up, and also exceeded the most recent previous peak at this point here. And at this point here, the trend changed. We no longer need this trend line here, so I'll remove it. So in a downtrend, the trend changes when 1. The trend line has been breached, and 2. The most recent previous peak has also been breached. In an uptrend, it's exactly the opposite. The trend only changes once the trend line has been breached and the most recent previous support area is breached, and the trend changed at this point here. Here we change to a downtrend again. Here you can see we have a downtrend. The market made its way up, it breached the trend line, and it also breached the most recent previous peak. The trend changed at this point here to up. Now, although we have a qualified break of a trend line, is this enough to trade on? Here the movement thrust of the market is in a downward motion, and here we've just started to edge our way back up again. Now, one of the ways we can filter this to help identify a better trade is by the use of Fibonacci. And in the next lesson I will go over some ways you can use Fibonacci to help identify a higher probability trade. So see you in the next lesson. Thank you.